Russia's invasion of Ukraine added fuel to the ongoing rush. Global investors, who were already withdrawing money from developing nations to park them in the US, frantically started pulling out the capital. Aggressive rate hikes by the US to tame inflation made the dollar more attractive. The dollar index, which tracks the US unit against a basket of major currencies, rallied 11% this year to a two-decade high, causing persistent depreciation of currencies around the world. As a result, the Indian rupee breached the psychological mark of 80 against the US dollar to hit a record low for the seventh session in a row on Tuesday. The domestic currency closed the day at 79.95 after touching an intraday low of 80.06. One of the main reasons cited by Finance Minister Nirmala Sitharaman for the depreciation of rupee was the capital outflow. Foreign portfolio investors have sold shares worth more than $30 billion so far in 2022. The widening trade deficit also leads to depreciation pressures on the exchange rate. India's trade gap widened to a record high of $26.18 billion in June as the country's economic recovery meant higher non-oil as well as oil imports. The RBI has been intervening to defend the rupee against any sharp volatility and ensure orderly depreciation, leading to forex reserves plunging to a 15-month low of $580 billion as of July 8. While the rupee has lost nearly 7% in 2022, currencies of some advanced economies fared much worse. The euro is down 13%, British pound 11%, and the Japanese yen 16%. As a result, rupee has appreciated against these currencies. The rupee also lies at the middle of the pack among its Asian peers. The South Korean won, Philippine peso, Thai baht, and Taiwanese dollar have fallen more than the rupee against the US dollar. A weaker rupee can help India's exports become more competitive, but by one measure, rupee is still overvalued. The 40 currency real effective exchange rate or REER, which shows the currency's competitiveness against a basket of its trading partners, stood at 104.18 in June as against 104.78 in May. A value over 100 signals overvaluation.
So the dollar is the king right now, and we see further downside pressures on the rupee going forward. From macro's perspective, it is going to have an impact on inflation also. We find that when the rupee depreciates by 1%, it increases inflation by 5 basis points. So that's like imported inflation. Further, it will increase our import bill also, which and thereby could widen current account deficit. EM counterparts, if we talk about Philippine peso, Thai baht, or Malaysian ringgit, all these currencies are depreciated to the same extent or to a larger extent than the rupee in the recent months. So it will help in protecting some bit of export competitiveness. So that's the only bright side I see there.
Historically, it is seen that India's exports respond more strongly to changes in global growth vis-a-vis currency movements. The impact of rupee depreciation is varied across sectors. Pharma industry insiders say it is likely to be largely neutral and the benefits may be offset by rising input costs. The textile industry, which is a net exporter, will benefit from a weaker rupee, but industry sources say that the gains may be short-lived as customers will demand revised rates in the upcoming orders. As for the gems and jewelry sector, the depreciation of rupee is giving cost advantage for its units. The IT services and technology industry will be among the biggest gainers of a depreciating rupee as US contributes more than 50% to its revenues. Meanwhile, tourists and students going to the US will have to shell out more. But students who are currently studying in the US and plan to secure a job that pays in dollars will gain. On the other hand, rupee's appreciation against euro can help outbound travel to European countries, but high oil prices and strong pent-up demand has led to a steep rise in international airfares. International tour costs are already up by as much as 50% compared to 2019.
Right now the situation is worrying in the sense we are seeing capital flight taking place. So our forex reserves are going down. Although our forex reserve cover to import is high, but what has happened after a number of years, the forex reserves are now less than the external debt of India. That is also adding pressure to the currency. All in all, inflation, current account, and second down impact of these two on the currency. More than the currency, what is beneficial for Indian exports is how strong the global demand is. Because of the high prices, we may see that the value of exports in dollar terms or rupee terms going up. But if you look at the quantity terms, the growth will be not be that strong as we have seen the last.
Stemming capital flight is crucial to ease downward pressure on the rupee. Also, slowdown in global demand amid recession fears in the US and Europe can wipe out whatever gains Indian exporters may see due to a weaker rupee. The International Monetary Fund in April cut the global GDP growth forecast to 3.6%, and in its upcoming review next week, the fund is set to downgrade the forecast substantially. Exporters in sectors like IT and pharma will gain from a weaker rupee, but export sectors where the import intensity is high will see further pressure on input costs.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.